I'm indeed thankful to Earthwave for giving us at Aadhaar an opportunity to talk about the topic which is very close to our heart, which is on low-income housing. Over the next 20 minutes or so, I will take you through and make an attempt to take you through where we stand with respect to low-income housing in India. Ever since, if we go back and see, ever since we saw the crisis of 2008-9, especially in India with respect to real estate, suddenly everybody's discussions changed from premium housing, luxury housing, and it moves towards affordable housing or low-cost housing. Unfortunately, affordable housing has got different connotations and different people use affordable housing in different ways. To cite an example, in a place like Bombay, people now say that a house of, flat of 1 crore is affordable. So for the sake of simplicity and to maintain consistency in our presentation and our discussions, we will not use the word affordable housing, but we will rather focus on low-income housing, which easily is tied to the fact that if people have low income, which we mean is people who earn, let's say, up to 20,000 rupees per month, will fall in the category of low-income housing. And how is this market looking when we look from that perspective? If we were to go through, what we are going to talk about is the Indian housing sector. How does it look at the macro level? And then in that, our affordable housing scenario, which we have defined earlier, is what the scenario looks like. What is the demand in this segment? How is the government supporting this? And what are the various initiatives we see from the government? While government does their bit, there are challenges. There are challenges at every front. What are those challenges? And lastly, considering the fact that I represent a housing finance company, and Earthwave being a fund management company, and most of you on the other side, either investors or prospective investors, would like to see and perhaps hear from the practitioners at the ground level as to what has been the experience of a lender who is providing home loans to this low-income segment. So we'll give a bit about our experience in this segment. So by the end of the presentation and webinar, we are hopeful that you will be able to get a fair amount of idea as far as low-income housing is concerned. Some of the myths which are an integral part of this segment will perhaps get broken and will give you a clear picture as to why we feel that this is really the next wave of real estate in India. If we look at the growth of housing sector, this slide and perhaps the next few slides is nothing new. Most of you would have already been aware of this, but in order to maintain consistency and to have a flow to the presentation, we felt it is necessary to include this slides. From a demographic perspective, there is a lot been said about how this demographics of this country and how the population of this country is now an opportunity by itself, and it can be seen very well when we put up the points together. If we look at the growth of housing sector in the country, the key growth drivers are our increasing population, housing shortage, rising urbanization, coupled with nuclearization of family, young India, rising affordability, and supported by government's thrust on housing. I'm sure each of you would agree to this point that all these points, demographics, are definitely adding on to the growth of housing sector, especially the urbanization, rising urbanization. More and more people from smaller towns are moving towards larger towns, or you have smaller towns now becoming bigger towns. If we look at certain examples, cities like Nagpur, cities like Bhubaneswar, cities like Raipur, Bilaspur, those cities which a decade ago were small towns or perhaps even did not have an airport, today boasts of airports and perhaps shopping malls, multiplexes, and fancy restaurants, which means that we are seeing more and more urbanization in our country. Data suggests that this urbanization will grow to 40% by the year 2026. Why I'm stressing the point on urbanization is because this is directly linked to the growth in housing sector. Second is nuclearization of family. From joint families, today you are seeing smaller families, which obviously leads to the factor of more demand for housing. Young India. A lot has been said about young India, not just in India but across the globe. And very interestingly, half of the citizens of this country is below 25 years of age, which tells us what kind of demand lies in the housing sector. Rising affordability is linked to rising incomes. I'm not going to spend much more time on that. And of course, government's thrust on housing. There are various schemes which government of India has launched, in addition to direct tax benefits, which we'll see over the next few slides. So overall, the growth of housing sector is definitely boosted by the certain demographics which we see happening in our economy. Add to it at a global level, at a macro level, you have the mortgage to GDP ratio, which also works in our benefit, with countries like UK and US in more than 80%, but country like us at just about 10%. It's very interesting that this used to be 6% in the year 2006, has now gone up to 10%, which means that we are definitely seeing that there is a lot of interest in mortgage, and people are not averse to taking loans as we have seen in the past. Lower the ratio, higher is the opportunity for real estate. By 2020, we expect this to increase to 20%, and we will then yet be below emerging economies like Malaysia. This is as far as the mortgage and GDP ratio is concerned. Housing shortage, again, nothing new here. Across, I've just listed few of the states. Again, these are those states which are usually called as the backward states of the country. But we have still listed it to give a perspective as to what kind of demand and what kind of shortage we are seeing as far as housing is concerned. Housing shortage is expected to be over 26 million. Now this is very interesting, because just yesterday I was at the Affordable Housing Summit in India, in Bombay, and I'm given to understand that this number of 26 million units is understated. And it is understated by almost half, which means that there is shortage is expected to be around 50 million units. And 90% of this shortage happens to be in the 300 to 800 square feet size category, which is where both Earthwave and Aadhaar come into the picture, which is defined as the EWS, economically weaker section, and low income segment. Which means that the market is huge, and as investors or lenders, we have the choice where we want to go and put money. If we look at this housing scenario, income level, if we just go straight to the bottom, income level below 24,000 rupees. Look at the market size. Estimated market size is a mind-boggling 10,000 billion rupees, where the price of a unit is anywhere between 3 lakh to 10 lakh. Now, of course, there would be some of you who would be saying that, what do you get in 3 lakh rupees and a 7 lakh rupees? We have an average ticket size of 6 lakh rupees, and we have more than 3,000 customers. So clearly, there are houses which are available and can be built as little as 5 lakh or 6 lakh rupees. But there are challenges. What are the challenges? The builders are hesitant in this segment to work because they feel there are low returns. There is a lack of adequate project finance availability, which means that getting access to funds is a challenge. At the ground level, when a customer wants a loan, judging the credit worthiness is difficult. And add to it, few formal financing options available, which forces this set of people to go to private money lenders, loan sharks, and pay usurious interest rate of maybe 3% per month or 4% per month. But the base of the pyramid is where the pot of the gold lies. And that's an attempt where we at the DHFL group level come into the picture to see how we can make difference, and in the process, of course, be profitable and sustainable. How does the demand look in this segment? If you look at the demand in this segment, it covers almost 90% of the population, and this is the population which has the highest demand in this segment. The average area of the house which they would need is approximately between 400 to 600 square feet. So clearly you are seeing that there is a huge demand in this space. This is as far as the demographics, the supply, the demand, and the mortgage to GDP ratio goes. From this we move that how is government supporting this initiative? There are various different initiatives taken by the government both at the central level and at the state level to increase housing stock, to incentivize people to buy houses. One of them being the National Urban Housing and Habitat Policy of 2007. Second is JNN, popularly known as JNN-URM, which is Jawaharlal Nehru National Urban Renewal Mission, which works towards providing integrated housing and slum development. Indira Awas Yojana offers cash subsidy to people in the poverty line, BPL families. In addition to that, there is a scheme called ESHUP for the urban poor, which is an interest subsidy scheme, which means that if we have lent to an urban poor, then there is an interest subsidy which comes straight to us, which we have to credit to the customer's account in the home loan account with us, which is a 1% interest subvention scheme. In addition to that, the list goes on and on. The intent behind this is that the government is also pushing various initiatives to promote housing in this segment, act as a catalyst. But as we go along, we'll see that it also brings in its own set of challenges. But the good thing is that there is a progress, there is a will, and an intent is being seen as to how we can push housing in this segment. And hence we feel that it becomes a win-win-win for everybody by way of, you have a customer, you have an investor, you have a builder, because government in addition to that has to bring in the infrastructure to ensure that the commute, because most of this low-cost housing will not be in the city center, it will be out of the city center. It will need investments in infrastructure. Like I said earlier, the low-cost housing will anywhere be between 200 to 350 square feet, which is anywhere between 2 lakh to 3 lakh. Overall, if we extend it to smaller towns, it can go up to 500 square feet. And this set of people will be able to service the loans without subsidies, because if they do not have a place of their own, they are paying rent for staying over there, which can then be substituted by the EMIs. Of course, it would also entail a lot of other incentives with respect to how the funding is managed. So if we look from all perspective, there is clearly a win-win for all. But obviously the bigger question comes to the fact is, why would builders get into this? And what is in it for the builders? And if we see whatever we have seen, and based on the site visits and meeting with the builders by Earthwave team in some of the towns where we operate and doing an analysis, it is observed that when you compare a low-income housing project versus a luxury housing project, one does see that the IRRs are significantly higher for two reasons. One, your ability to turn around and do the project execution is faster than a luxury housing. And secondly, there is an inherent demand as far as this segment is concerned, which means that if you have 200 flats, you would see more than 500, 600 applications, which means you will be able to pick and choose the kind of customers you want. Your project would be bigger because you would have smaller units, and hence number of units will be bigger. Your construction cost would be lower, as a result of which your IRRs in the low-income housing are better than those in the luxury segment. But like I said earlier, there are challenges. There are challenges to each and every segment of this. Some of these challenges are common across. It could be as an industry, as a real estate industry, these challenges would be there. And some of the challenges are very, very specific to this segment. Some of the challenges are, you see low developer DA activity, which impacts the supply. Today, if you ask anybody who operates in this segment, nobody will say that there is no demand, like you typically find in case of a high-end residential project. When you talk to a builder, he will say that yes, my sales are low. On the other spectrum, if you go to a builder who is in this segment, he will say no, his sales are booming, he has more customers walking in than what he can offer. But unfortunately, we have observed that there are itself low developer activities in this. Getting the KYC documents from these customers, especially the non-earning applicants, spouse, if you were to call it, where they're getting KYC documents is a challenge. It's a regulatory requirement, so it poses a challenge for the lender. There are legal challenges in the properties. Sometimes you find that the property records are not updated properly, or there could be litigation on those properties, or there could be missing links. So those could be various challenges which you find. And of course, add to it from a lender perspective, there are high cost of operations to manage. Additionally, one of the biggest grounds the developers have is the time taken for getting all the approvals. And this indeed is one of the biggest challenges. It cuts across the entire spectrum. It doesn't matter which part of the country you are doing your project, but getting the approvals, be it environmental clearance or local body clearance, cutting across, be it state or central, getting those approvals itself is a big challenge. The second set of challenge also lies in getting the land, availability of land, getting the land tracts, which can then be used for construction of huge complexes in this segment. These are some of the challenges which we see, and of course, additionally, to get the funds. You know, there is an FDI which is available for investors to invest in developer for a project. However, those FDI norms are such that they cannot be invested in smaller projects. Now, if we typically look at a tier 2 or a tier 3 town, the project size which they would need is not something which will be FDI compliant. And hence it surely needs certain amount of relaxation, especially for this segment. So these are some of the challenges. Now, amidst this, which we have so far, gone through, starting from the macro level all the way right to this segment, we now move a step further down to see how we at Aadhaar have been dealing with this segment. Who are we? What have we been doing? What is our focus? And our experiences, what we have been doing and what we have observed. Like Vikram mentioned earlier during the start of the presentation, Aadhaar is supported by Diwan Housing, a pioneer in housing finance company, especially in the low to middle income segment. And Aadhaar is supported additionally by International Finance Corporation, a World Bank member group. We are registered as a housing finance company and we are regulated by National Housing Bank, which is NHB. We are one of the very few focused housing finance companies which are catering to the bottom of the pyramid or the base of the pyramid. We, in addition to that, operate also in identified low income states of the country, which is UP, MP, Chhattisgarh, Jharkhand, Odisha, Bihar and West Bengal. We cater to both salaried, self-employed set of customers, and we offer loans up to 12 lakh rupees, which means the property price can be up to 15 lakh rupees with an LTV not exceeding 80%, which is also one of the regulatory norms. But this is clearly our focus, this is clearly our mandate where we operate. And how so has been our experience? Because these are the typically those customers whose earnings are below 20,000, 24,000 rupees. 80% of our customers earn below 30,000 rupees per month, and yet they are able to take a loan from us, which otherwise is usually say that this is a high risk category. One of the challenges which lies in this segment is creating awareness, making them responsible about financing, which we call it responsible financial inclusion, because now they are also not just having a bank account, but they have a loan account with us, which they have to repay over the next 10, 15, 20 years. So we call it responsible finance inclusion. How do we go about doing all those things? Some of them are time tested, some of them are new for us, something which we have done ourselves. Paramar Shivir is one of those, which is nothing but consultation camps where we inform them on the property selection. We have what you call as legal and technical sessions. We explain them why legal title documents are important. We explain them why they need to get their plans approved, give them technical guidance on that, which means that this is more of a consultation camp at no cost, but it creates a lot of awareness, and because of that awareness they are also able to ask the right set of questions to their customers, something which we have pioneered in our segment. Second is Aadhaar Awas Mela, again nothing new. Lot of housing finance companies and banks do this kind of exhibitions showcasing properties. The only difference is we do it only for our segment, where we have property developers showcasing their properties. We have lectures by legal and technical experts, and customers walk in, select the property, ask the questions, and apply for a loan. What is different in this? The difference is we conduct in tier 3 and tier 4 towns. There could be property exhibitions, and there are property exhibitions in places like Mumbai, Delhi, but we don't only do it in places like Indore and Bhopal, but we go one level down to those locations like Mandideep or a Puri or a Rourkela and do these exhibitions, giving an opportunity to both the builders to showcase their properties and the customers to select under one event. Then we have developer customer interactive sessions where we create the awareness on the supply side. Talk to them that because their concerns has always been that there is no financing available to this set of developers. So we say that yes, there is a financing available, and we are the ones who will provide financing to your customers. Have interactive sessions which gives them an encouragement that yes, there is financing available in this segment. And recently we have just introduced what we call as Aadhaar Sanjog. This is something which is like a doorstep service. We go to a particular colony and talk to them about the legalities and the technicalities involved, about why repayments are important, why repayments regularly affects positively their credit standing. We explain them if they don't pay on the time, how it affects their credit, and as a result of which how their ability to get loans from other financial institutions is less. So these are some of the activities. Largely why I'm focusing on this is to give a comfort to you that yes, there are financing companies available to pull the product through the chain. And there are HFCs apart from the banks who are anyway present. There are HFCs which are present in this segment. Some of them being Muthoot, who has recently launched a housing finance company. Then you have Shriram, who is coming up with a housing finance company. You have a Magma, who is going to start housing finance company, largely again catering to this segment. To give you an example about our customer, who are our customers? This is one such customer, a Sohan Pal Singh, in Bareilly, which is in UP, worked as a peon in Meerut. His take home is 10,000 rupees, He wanted to demolish his existing house. We disbursed a loan of just 2 lakh rupees to construct his dream home. This is where he used to stay earlier, the one which is with bricks and unplastered. And this is the house which he has now constructed with a loan of 2 lakh rupees. Which means that this tells us that with 2 lakh rupees you can indeed buy a new house and move in over there. Second such customer in Raipur, a joint family working, owning a fabrication workshop, and they wanted to move into a house which is bigger to meet their requirements. So they came to know about Aadhaar, and we disbursed a loan of 12 lakh rupees. This is where they used to stay, a thatched roof. And with a loan of 12 lakh rupees, not only could they afford a new house, but of course you can see that they were also putting on new clothes to move into the new house. How do we go about building awareness? By using these different banners which kind of say, this is again done very, very locally, which kind of talks about what are the things they need to keep in mind from a technical perspective, what is it they need to keep in mind from a legal perspective, in a very, very simple language, easy to understand, and with a clear focus on who will be benefited with this. As you can see, it talks about Railway Karmachari, Shashkiya, third evam fourth Shreni ke Karmachari, which is your grade 3, grade 4 employees, and so on and so forth. So using these multiple ways, we reach out to the customers in this segment, create the awareness, and bring them into the mainstream of taking loans from an organized sector. By doing all these things, how it has resulted, what is the outcome? You have a strong base of 3,300 customers and growing every month. 80% of our customers earn below 30,000 rupees per month. 26% are self-employed. 24% of the loans are in rural areas. This is a very important point. 40% pay through ECS. Now, yes, I have to do say here that not all our locations are ECS enabled. So from an overall perspective, 40% pay through ECS, but those customers who are based in an ECS location, 93% of them pay electronically through us, with an average ticket size of 6 lakhs. 1/3 still prefer self-construction, largely because you do not have adequate supply in this segment, and as a result of which they go in for self-construction. And 86% of them prefer individual units as against flats. This is largely a tier 2, tier 3 concept where they would like to have their own unit as against owning a flat, which would, I feel, is a lot different than what you would normally see in any other bank or any other housing finance who is in the mainstream. But yes, the fact is that these customers do tell us a story in the form of the huge opportunity which lies in this segment. Who are these builders? They are not your big daddies, the names which all of us know. They are not here. These are the local builders who have a city or a regional at the most presence. They have been around for about 10 years in the industry, have done about 5 to 10 projects. Cumulatively, they would have built and delivered anywhere up between 500 to 1,000 units. They moved into this housing because the time from starting the construction to end is fast because they are able to move things faster at the local level. And these are usually projects are on the outskirts of the city. So combined there would be some 300 to 500 units. And again, these are small units of low rise, which is ground plus 3, or there could be a row house, or they could be small plots of, let's say, 1,000 square feet, 700 square feet, and so on and so forth. These are your typical builders, very, very local set of people having aspirations to be bigger. And how would their project look like? Something like this, what you see is an actual, what we have from one of the developers. It is a G+3 unit and a small flat, which is nothing but your 1 BHK. An aspiration, a dream come true from what and where they stay, as you would have seen in the couple of pictures I showed you, moving into a flat, into a home, a roof which they call their own. So, ladies and gentlemen, taking cue from this, we see that there is a huge opportunity which lies in this segment, supported by various initiatives coming in from the government, and considering the low mortgage GDP ratio and bank loans, especially housing loans, having stood the test of the time in 2008, 9, 10, gives a strong buoyancy to this segment. More and more housing finance companies coming into this segment will lead to better service delivery, will lead to more competitiveness and choice to this set of customers, and ultimately will lead to a win-win-win for all the parties put together, be it investor, be it developer, or be it a lender or a customer. I hope with this presentation it would have given you an insight in a more detailed way as to how this segment behaves, what are the opportunities which lie in this segment. Again, there is not a single industry which does not have challenges, but there are challenges which are not unsurmountable, and I would say we fall in that category. So not taking much of your time, ladies and gentlemen, thank you very much for giving me this opportunity to talk about low-income housing, our experiences, and I'm sure with support coming in from fund management companies like Earthwave, Aadhar can only grow by leaps and bounds. Thank you very much and have a nice day. And I shall be open to respond to any of your questions you may have to the best of my ability. Thank you very much.
Thank you, Mr. Mehta, for a very analytical presentation on the investment opportunities in low-income housing in the country. We are now ready to take questions from our audience. Here is the first question from Oriana Capital Director, Mr. Sandeep Virkhare. He is asking, availability of right cost funds seems to be a challenge. He is asking for your views, Mr. Mehta.
Thank you. Yes, Sandeep has put a very right question on availability of right cost of funds. Does seem to be a challenge. But now with RBI giving approval for low cost housing through ECB, external commercial borrowings, one may be able to see their cost of funds going down, because these funds will be made available not just only to housing finance companies, but it will also be made available to developers. Of course, it will have to be routed through National Housing Bank. But right cost of funds seems to be a challenge not just only for this industry, but it seems to be a challenge across, and that's why we see that every time there is a talk on the CRR or on the rate cut, there is always an appeal from the industry, not just the real estate industry, but across all the industries put together, that there is an imminent need for lowering the cost. So this is a challenge not just attributed and specific only to real estate, but this is across the economy. And specifically for this segment, there are anyway some initiatives taken by government to reduce the cost of borrowing.
Anand Achal, you mentioned most of these LIG and MIG prefer individual units as against flats, whereas I understand Arthveda Star would focus on apartments.
Yes. Arthveda would focus on apartments. The focus is on the developers developing projects in the low-income housing. And the builders would have a choice in terms of what they would like to construct. It could be low-rise, which is typically G+3, or they could be single units on a plot of land, which are row houses. So it can be a combination of that, because the end cost will still be around, anywhere between 3 lakh rupees to 10 lakh rupees. In certain markets, because again it has to do with the geological thing, if certain markets have a soft soil, they may not be able to go vertical, so they may then have a row house. So it's not that Arthveda will only 100% be on flats, but it could be a combination with a focus on low-income housing.
Devika Dixit of Pamlani Group asks, I would like to know the concept of the business of investing in low-income housing.
Okay, when you say you would like to know the concept of business, I'm assuming that you are talking from a perspective of a builder. Now, as a builder, the concept of business would lie largely on two things. One is availability of land, which usually has to be typically on the outskirts of the city. And secondly is to do with the technology. Because the key to the higher returns in this segment is the kind of technology which is used for construction. Because the faster you construct, faster you sell, and your better ability to rotate the capital. So the concept of business largely has to be on two things. One is the availability of land, clear land, largely on the outskirts, and the technology which you use in this segment. Today you have various technologies which are available in the country, which can speed up your construction by anywhere from 30% to 60%, which means that you would have 40 to 50% less time, and hence higher IRRs.
Mr. KP Manikandan from Consultant Housing for All asks the top 3 changes you would make in the current ecosystem to make this a better marketplace for all stakeholders.
If wishes were horses, my top 3 choice to make the current ecosystem a better marketplace would be, the first one would be the land. More and more land we release will put downward pressure, and hence the ability to construct more would be higher. Today that has been the single largest challenge with respect to doing construction, because land is so limited. By this I nowhere mean to say that you open up infinite amount of land, but looking at the demand, there is a dire need to open up the land, free up the land for this construction. Number 2 is to make the approval process extremely seamless through a single window clearance. And third is to improve the infrastructure, which results in smoother, faster, and economical way of commute to the city center. Now this could be in a tier 2 as well, or in a tier 1 city as well. But these three things will definitely make the ecosystem much better from all the stakeholders' perspective, because when you have all these three, financing and all that, cost of funds, everything will take a backseat.
Mr. Nikhil Sharma asked, you mentioned briefly about FDI norms into this sector. Could you slightly elaborate on the same? From the perspective of a foreign investor, can an investor invest directly into Aadhaar? Or does Arthveda behave as a vehicle to invest into Aadhaar?
See, Aadhaar and Arthveda are two different entities with two completely different business models. To a large extent, we complement each other. When I say complement, I mean to say is Arthveda is a fund management house where investors like you would invest money and expect returns over the next few years, and expect Arthveda to make prudent investments with developers who would be developing projects for this segment. Whereas Aadhaar business model derives largely where individual customers would go and take home loans. Hence, investment in Aadhaar is not being talked about at this point of time, because Aadhaar is fully capitalized and there are shareholders. What we are talking about is Arthveda as a fund house which comes up with a fund which needs to be then invested. So there is a distinct difference between the two. But what complements is from a perspective of investor, you want to ensure that where the project gets invested, there is a full mechanism through which those customers are able to get the loans and resulting in the completement of the cash flow cycle. And that's the intent of this presentation, to give you an overall view of where the market is and where are the financing experiences of people in this segment. I hope I have answered your question.
While we have number of questions in the queue and it's very encouraging, but I'm afraid the time is up now. Thank you, Mr. Mehta, once again. However, you can write to us on info@arthveda.co.in and we will make sure that we answer all your questions. Thank you all for attending this webinar.